Welcome to my new trade breakdown. And yes, you read it right. I did make $5,839 today off of one single trade trading gold. And the one thing that I want to show you guys is that it doesn't matter if gold is at all-time high. If the trend is showing us a certain thing, we will follow it. And by the end of this video, you're not only going to know exactly how I made $5,000 in a single trade today, but also how you can copy me the exact same way in the most simple way. But without further ado, guys, let's get right into the trade breakdown. And I want to make a big emphasis on the fact that I sent it more than 30 minutes before it even happened. You guys can see here 8:40. You had not only one time to get in, another one. There was at least 10 different times before we hit break even right here where you could have entered. So my students had more than enough time to enter the trade with me. I was also live streaming in the Discord, but of course a lot of the students cannot join the live stream and watch me share the screen, and that's why I also send it in here. But enough of boring you guys with my mentorship student results. I also want to just show you how simple this is. It's a two-step strategy. That's completely it. Step one, finding daily bias. And step number two, guys, is going to be executing the exact same entry model using the exact same time frame, in my case the 1 minute, to enter every single day. All right, so 3 time frames. One is going to be used in step number 2, the daily time frame. If the 4-hour is then doing this, just creating lower lows and lower highs, lower lows and lower highs, then we're not going to do anything. Why? Because we need them both doing the exact same thing for us to have a bias and for us to then be able to move from step number 1 to step number 2. So in this case right here, we would just wait. Now, on the other hand, if we see the 4-hour doing the exact same thing as the daily, maybe not exactly the same. Now, for example, there could have been some lower lows and lower highs being created, but as long as the latest high is breaking, that would make it so there was a higher highs and a higher low that will be established at some point compared to the previous ones. So at this point, both the 4-hour and the daily are bullish, making it so that we are allowed to step down to the 1 minute and look for entries. Now, guys, if you guys are liking the way I'm teaching, you're liking the video, please make sure to hit that like, sub up, because it really does help out the channel, and leave a comment. And also, if you want to have access to all this, my full-on trading course is more than 10 hours long. Just check out the first link in the description. Now, for step number 2, I know I keep highlighting it, but it's very, very important. And it's very important that you guys stick to the end of this video where I actually show you how I took this trade step by step on TradingView, me breaking it down with the replay tool on TradingView. You need to stay to the end. For step number 2, it's as simple as what step number 1 was. We need the 1 minute to be doing the exact same thing as the daily and the 4-hour to be creating higher highs and higher lows. So what we're going to wait for there to be happening in the 1 minute is the following. Let's say for some reason it was breaking down. We wouldn't do anything. We would wait for there to be a break of the previous protected high right here, making the 1 minute bullish. That would be step number 1 for the step number 2. I know it's kind of a little bit confusing, but realistically, this is all we need. We need a bullish scenario, and then after, we need price to come back into our previous range, or really our current range which would be from the previous protected high to the current protected low. And then as soon as that happens, we're going to place our buy stop order. In this case, we'd be looking for buys, right? Because every other time frame is bullish. And we would then wait for price to show us some sort of momentum, showing us that it wants to move the way that we are anticipating for it to happen. And if it does, then we will get tapped in. If it doesn't, and let's say price just wants to fizzle to the side or just completely go down, we would get no break even in this case and no loss, or even no win. But in the case, and the probabilities would be on our side, if we do see the momentum, then it'll most likely want to keep on going higher there. And as always, we would target at least a 1 to 2, and once we hit 1 or another break to the upside, then we would go break even. And that's really the full strategy. Now let's get into the trade breakdown. Hit that fucking like. All right, guys, here we are on TradingView. But before we get started, I want you guys to have the exact same chart layout that I have. So I don't have any advantage over you or anything, and you can completely copy my trades step by step, like the complete strategy. And what you're gonna need is my indicator. That's completely it. Invite only scripts, and you can go ahead and see that you need this one, the 3M structure indicator. It's right here, my favorites. It's completely free, as you guys can see it, 3M structure /free. Now, for you to gain access to that, it's completely easy. You don't need to do anything. Don't even give me your email or anything. All you have to do is sign up right there. Then I can even show you right here. You see it says claim indicator access right after what you're going to do. And all you need to do is put your TradingView username so that it actually gives you access. I don't even get your information by you doing all that. And that's it. Then you'll be able to see the charts the exact same way that I I see them. Now, you may ask what these lines are and like whatever, how does the indicator work? And that's really, really easy. All you're gonna know is this. We went over step 1 and step 2, and in both, we needed higher highs and lower lows to be created, right? So let's say in this case, we have a market that's having breaks to the upside. Every single time that there is a break, there will be a number. Every time that there's a break of a previous high, there'll be a number. And every time that there's a break of a previous protected low, there'll be a number, putting us in a high, a low, high, a low, a high, a low. So every single one of these points is going to be a protected high and a protected low, protected high, protected low, protected high, protected low. What a lot of these mentors fail to show you is that there is a difference between just a high and a low and a protected high. And a protected ones will put us in ranges. So in this case, from this high to this low, from this high to this low, from this high to this low, and so on and so forth. Now, myself, I've developed a way that I can see that with certain specific rules that you learn in my free course, where you don't have to be charting out every single time, drawing lines, whatever, finding the actual protected low. No, all you need is the indicator, and it does it automatically for you. I make my life easier. A lot of people use AI to automate everything, so I use an indicator to automate my trading, basically to make it easier. But in a nutshell, that's what the indicator does. So you guys can see the breaks are right there, showing us the ranges. So in the daily, we can clearly see that there's multiple breaks to the upside. In this, there's been over 5. Well, there's been over 4, making the daily really, really bullish. So we can step down to the 4-hour and look at the exact same thing. What is it doing? Breaks to the upside. Many, many higher highs and many, many higher lows. We all know that gold is very bullish, but I want to point out the fact that it's super, super, super bullish. And guess what? We're still there at all-time highs, looking for a price to go higher in our day-to-day trades. And then right after, what we did was I stepped down to the 1 minute. Now in this morning, when I stepped down to the 1 minute, what did I see? I saw breaks to the downside. You guys can see them right here. We had 1, 2, 3, 4 bearish ranges, making the full bias of the 1 minute bearish. So what I waited for a break of the current protected high, which was right here. You can see it with the line with the indicator. And after I wait. And second, I want price to come back into our range from the current high after a new high gets created, and the current protected low. After that happens and it comes back into the range, we can then put our we can then put our buy stop order right above wherever the current high is, our stop loss where currently the current low is, and then that's it. If we get tapped, we get tapped. If we don't, then we don't. Okay, we get the break. Now we want price to come back into our area. Where is the area, you may ask? I will show you. From this high to this low, that's the range. We get price, it comes back into the range. What do? We put our order above the current protected high in our stop loss wherever the price currently is. Of course, we're not gonna be tapped in up until price comes all the way up here, but still, you get the point. Now here you guys can see that price shows us the momentum that we wanted, and we get our entry. As always, we aim to at least have a 1 to 2 to make our money. And lo and behold, after a couple of hours, our TP got completely smashed. As always, thank you for watching. I'll see you in the next trade breakdown. You can click somewhere here on the screen. Like every day when I take a trade, I will make a breakdown and I will post it on YouTube. You can see it somewhere here on the screen. It's a full playlist. I show my wins and my losses. I'm actually gonna record a loss that I took yesterday right after this video. But as always, hit the like, sub the fuck up, and leave a comment. Thank you for watching. See you on the next one. Peace out.